Your offer got accepted, the inspection went great, and then the appraisal comes back $150,000 below the purchase price. If that just happened to you, I know exactly how you are feeling right now. And I am going to walk you through exactly what happens next and what your options are. This is one of the most stressful moments in any real estate transaction, and in a market like Greenwich, where homes are regularly selling above asking price, it is happening more often than most buyers expect. The good news is a low appraisal does not automatically mean your deal is dead. You have options, and knowing what they are before you panic is everything. I am Charles Nedder, a realtor here in Greenwich, Connecticut, and I have navigated dozens of low appraisal situations in this market. By the end of this video, you will understand exactly how the appraisal process works, why appraisals come in low, and the 4 options you have when it happens to you. First, let us make sure you understand why this happens. When you are buying a home with a mortgage, your lender sends an appraiser to determine the property's market value. The lender will only lend based on the appraised value, not the contract price. So if you agreed to pay $1.5 million and the appraisal comes back at $1.35 million, your lender is only going to base your loan on $1.35 million. That $150,000 gap between the appraised value and your contract price is the problem you need to solve. And in Greenwich right now, where competitive offers are pushing sale prices well above what comparable sales can support on paper, this gap is showing up regularly. So here are your 4 options. Option 1, you cover the gap out of pocket. This is the most straightforward path, and it is what keeps the deal on track with the least friction. If you have the cash available, you simply bring the difference to closing. In our example, that means bringing an additional $150,000 beyond your original down payment. This is where having strong reserves matters, and it is one of the reasons I always talk to my buyers about appraisal gap coverage before they even make an offer. If you planned for this possibility up front, this option is painless. If you did not, it can feel like a gut punch, but it is still on the table if you have the funds. Option 2, you negotiate with the seller. This is the most common path I see in practice. Your attorney reaches out to the seller's attorney and asks the seller to reduce the contract price to meet the appraised value, or to meet somewhere in the middle. In Greenwich, whether the seller agrees depends entirely on the market conditions around that specific property. If the seller had multiple offers and knows another buyer is waiting, they have very little incentive to reduce. But if the property sat on the market for a while before your offer, or if the seller is motivated by a specific closing timeline, there is room to negotiate. The key here is that your agent and your attorney are working together to present a compelling case, not just asking for a price cut, but explaining why meeting in the middle protects the deal for both sides. Option 3, you challenge the appraisal. This is something most buyers do not realize they can do. If you believe the appraiser missed relevant comparable sales, used inappropriate comps, or made errors in their analysis, your lender can submit a reconsideration of value. Your agent plays a critical role here. I will pull recent comparable sales that support the contract price and submit them to the lender with a detailed explanation of why those comps are more appropriate than the ones the appraiser used. This does not always work, but in a market like Greenwich, where properties vary dramatically from one street to the next, appraisers sometimes miss the nuance. A home on the water in Riverside is not comparable to an interior lot in Cos Cob, even if the square footage matches. If the appraiser used weak comps, a reconsideration of value can move the needle. Option 4, you walk away. If your contract includes a mortgage contingency, a low appraisal typically gives you the right to terminate the contract and get your deposit back. This is the nuclear option, and it is not one I recommend unless the gap is so large that covering it or negotiating it does not make financial sense. But it is important to know that this protection exists. Your attorney will review the specific language in your contract to confirm your rights. In Greenwich, every contract is negotiated individually, so the contingency language matters. If you waived the appraisal contingency or included an appraisal gap rider in your offer, your options here may be different, which is why understanding what you agreed to before you signed is so important. Now, here is what most people do not think about until they are in this situation. You do not have to pick just one option. The strongest approach is usually a combination. You challenge the appraisal while simultaneously negotiating with the seller, and you come to the table prepared to cover a portion of the remaining gap if needed. That three-pronged approach shows the seller you are serious about closing, gives you the best chance of reducing the gap, and protects your position if the reconsideration comes back unfavorable. So here is what I want you to take away. A low appraisal is not the end of your deal. It is a negotiation point. You can cover the gap, negotiate the price, challenge the appraisal, or walk away. The buyers who handle this best are the ones who planned for it before they made their offer and who have an agent and attorney working together to protect their interests the moment it happens. If you are dealing with a low appraisal right now and need someone who has been through this dozens of times in Greenwich, reach out. Give me a call at 203-524-4303.